Thanks for tuning into Talking Point. It's a special talking point because the talking point today is the market, and as Samina keeps on saying through the morning, the support cast and what the support cast has done. To talk about all of that, two men who got both their political call right, if you will, or at least the seats call right, and maybe the market's call right as well. I'm using the term maybe because I don't quite know what the positioning was last week. Andrew Holland and Nandik, CEO and CIO at Avendus Capital Public Markets, alternate strategies respectively. Gentlemen, thanks so much for joining in. Did this shape up exactly how you thought it is, and what's the way ahead now? Because that's the key thing. Either of you.
No, so it shaped up the way we were thinking the numbers would be. In our framework, 2019 was a tougher election than 2024. Again, the starting point alliances in UP, Karnataka, Bihar were more in favor towards NDA. So the numbers are panned out. Markets also are higher. What could interestingly happen is a lot of short covering can happen, because in sectors like banks at index level, there are lots of FII shorts. And if typically in the last 2 or 3 election cycles, exit polls haven't got it wrong. If anything, the exit polls have indicated a lower number for the victor. In 2009, they gave a lower number for UPA when they came back. In 2014-19, they gave a lower number for NDA when they came back. So I would say there's a decent chance that even 400 could be touched. So it may not be a meaningful probability, but not a zero probability as well. So if that happens, you could have substantial short covering. We already are seeing a 2.5% rally, 2.5% rally at index level. That could easily go towards Nifty 23,500 in a very short time.
I'm asking, is the short covering dependent on a particular number of seats? Even if it's at 350 and not 400, you don't think the short covering will come in?
No, it should happen. So even then the short covering should happen. But at 375, people will throw in the towel pretty quickly.
Which people?
No,
the shorts.
So I think the foreign investors, obviously came in and hedged some of their portfolio, which is fine.
Yeah.
For that tail risk. I mean, they would be, told by their risk managers you have to do that.
That's standard practice.
That's standard practice. So they weren't shorting the market. They were just going for that tail risk. Now, if that's gone away, they're going to come back and say, well, we don't need it anymore.
But my question is, would you wait till the 4th of June? That would be too late. We're probably going to see that by this afternoon.
See, it's very easy, right? The market was down 2% last week. So just 2% is just covering that kind of fall of last week. Then you add the short covering. So easily going to between 3 to 5% today is where the market's going to go. And then if Nandik's, in terms of what the brokers are saying, that you could see an upside to those numbers, then you've probably got another 2 to 3% on top of that.
Let's break this down between an investor and a trader. We've got 23,100 crore, as we said. As expected, we should see.
Okay, so let's break it down between an investor and a trader. Let's assume that there is an investor who is watching you right now, wants to understand what to do. Should he put in the money right now? Because the usual statistic is don't chase the gap up. But here the gap up is slightly different in that, as both of you are saying, that there is a possibility of a short covering, but also that over the next 3-4 years, with the earnings growth and policy continuity, the markets may be much higher than where we are right now any which ways.
Correct. So an interesting point which needs to be factored in is most investors tend to be pro-NDA in their leanings, So you will have investors thinking, okay, fine, maybe we have a gap up, but you also have the other part of the brain, possibly celebrating the victory. So my estimate is a good amount of flow should come today itself.
Nandik, I want to sort of give you a counter to that. I agree with you. I mean, there's no data to show how investors in the market feel politically leaning. They push for continuity.
Correct.
But these same investors who are, to quote you, pro-NDA, last week were very circumspect. And if in their personal capacity you would have asked them, "Kaun aa raha hai?" they would have had maybe no question in their mind. But when it came to the uncertainty in the markets, they followed through. So,
but then you did not have the data with them, the exit poll data last week.
Exactly.
Now the exit poll data.
So you need the data.
Yes.
At the end of the day, market watches the data.
Yes, absolutely.
See, market doesn't like uncertainty, right? So it doesn't matter whether it's foreign investors, big investors, or retail investors. Now you can see a roadmap. Now you know there's a roadmap ahead. Now you can go back with that conviction that I want to buy these sectors or these companies because they will benefit for the next 3 to 4 years of the policies of the government. So that's the confidence you get back to come back into the market and say, I'm okay investing at these kind of valuations, even though there's a gap up, because over the next week or so, we're going to hear about I'm sure about the 100-day policy and what that's going to be about. And that's going to be the next trigger.
Yeah.
Nandik, Andrew, comment on this, right? Let's break this down between a trader and an investor. We are at 23,100. We will stabilize over the next couple of hours. Europe opens up. FIs come back in. We may close at today's opening. We go into tomorrow. What happens then if the exit poll is exactly a reflection of what tomorrow's outcome is? And what happens post that then? Sure, we see 23,500 on the screen. We all clap our hands. Life is great. It's back to business on Wednesday morning.
No, so 23,500 and so the way in which the markets are panning out, at least we are very short-term focused as of now. I don't think at this stage we as fund managers or asset houses
do have the ability to.
Correct. We should be looking at what's happening after 7 days. The event is a very big event. The move which will follow the event will be big. So at least we are focused for the next 36 hours. And at least my view is in the next 36 hours, 23,500 will get touched once.
Right.
So what happens after that, I'm not very sure, because it's 2.5% rally, 3% rally. 23,500 is hardly 1% away. So, once that gets touched, my view is you won't see too much of selling because positions which had to be lightened have already got lightened. And now a lot of fund managers will now anticipate flows into that, let's say, their long only funds. So there's no need to actually, lighten the portfolio.
Right. So in your portfolio, I mean, you run the Avendus Absolute Return
Correct.
Fund, and it's some sort of a long short where there is a little bit of hedging that takes place.
Correct.
Funds like these do exponentially when the markets are volatile. This is seeming like a little bit of a one-way journey, in my opinion. Where are your hedges sitting? Are you still largely long? Is there a little bit of short covering, hedging on your portfolio? What is the long-short ratio that you're sitting on?
Correct. So
And how will that change come Wednesday?
Yes. So at this point of time, the long ratio is slightly higher.
How much is slightly higher?
We will not
We will
want to get
disclose
into
that,
that.
okay.
Yes. But at this point of time, we are slightly higher. The reason is the mandate of the fund is to give superior post-tax debt returns. And let's say the exit polls would have said that the number is under 300 or under 275, then even debt markets would have given you pain.
Yeah.
So the way in which we manage the position is with this kind of an outcome, we are making good amount of money today. And even if, let's say, the numbers would have been bad, then we would have fallen less than debt markets.
I think also, Samina, you're concentrating on Nifty, right? And I would say look beyond Nifty. I mean, yes, you'll have those stocks, but the bank Nifty is again,
it's 50,000 as we see it right now.
I mean, it's got to
So
go.
are you buying private banks?
It's got to go a lot higher. It just has to, with the RBI dividend, which we talked about. Like, I'm so excited about that. And I don't think everyone's gone short of the banks. That's been the favorite kind of, because it's liquid. Now they have to cover that and start to say, if the economy is going to do well, which we saw those figures on Friday, the banks will follow.
And is the bias with private sector banks?
I think it's with private and PSU banks.
And also capital market play, right? With the kind of euphoria equity markets are saying all fund houses are going to be increasing or at least earning more money in the next couple of quarters. And we've seen some of these stocks play out so well. And if, like Neeraj keeps insisting, this is Buy India 5-year story. And if this is Buy India 5-year story, capital markets also become the best bet.
Yes, and we'll probably see that. I mean, they're sitting in quite a bit of cash as well, so they have to deploy that over the next few weeks as well. So I think capital markets stocks will do well because of the longer term. I'd probably be more towards the themes that will play out, in terms of where I think the policies will be, and those will continue to be renewables, will continue to be defence, railways, capex in terms of infrastructure, and of course tourism.
Okay, and just to highlight the point that both Andrew and Nandik are making, we'll revisit that, the YTD performance of the PSU Bank Index versus the Bank Nifty, and just shows what a rank underperformer Bank Nifty has been to PSU banks, and thereby the probability of a laggard. So this is the today's chart, but if you put the YTD performance of the PSU Bank Index, this year 37% for the PSU Bank Index, it was 29% just before the day started. Bank Nifty was 1.5% before the day started. It would have gone up a little bit, but 4.2% versus 37% just lays out the contours of where the underperformers have been. So, Andrew, you were talking about themes that will outperform because of policy. Policy beneficiaries have done well in the last 12 months to 18 months as is. Would you still bet on them, or would you look for the laggards?
I'm going to buy into where I think the growth is going to be.
Okay.
And the laggards are laggards for some reason, right? So FMCG, you know, I'm more bullish on the kind of premiumization, so that's more beverages. But the action is going to be in capital goods. It's going to be in renewables. It's not going to be in, you know, yes, rural economy might start to pick up, but it's not going to be that the top line is going to grow from, you know, 10% to 35%, right? It's not going to happen. It's going to be a slow burn up for these companies. So I would be where you're going to see huge growth, and I think these are the sectors which you need to be focused in on.
So I was just looking through this piece that the Prime Minister has put out as an op-ed after he's exited Kanyakumari, and I thought it was interesting. And right now we're speaking with the assumptions that the results on June 4th reflect what the exit polls are saying. We're currently talking about what next in a possible Modi 3.0. And I just picked out this piece because he says we will need to make several changes to move forward in the global scenario. We also need to change our traditional thinking regarding reform. Bharat cannot limit reforms to just economic reforms. We must move forward in every aspect of life towards the direction of reforms and should also align with the aspirations of Viksit Bharat. He goes on to outline 4 directions: speed, scale, scope and standards, reiterates alongside manufacturing, we must also focus on quality and adhere to the mantra of zero defect, zero effect. Now, the next few days, frankly, I think for the market, for policy watchers, is going to be to understand what a 3.0 looks like. More of the same or new ideas we haven't really thought of. And I want to come to you on this, Nandik, because the big question immediately bogging the market in the last few sessions was minutiae in the larger picture, but is there going to be a change to capital gains tax, a new view on taxation? Now, when you're talking about reforms, not in the traditional sense of reforms, do you think there is going to be a case of adjusting expectations, even from the markets, and what we've traditionally seen as, all right, these are the reforms which are thumbs up and these are the actions which are thumbs down?
No, I agree with that. So whatever you read broadly covers everything, So if the Prime Minister does anything, that will fall in the definition which has been given. So yes, they will do reforms. That's given. Some amount of taxation change could happen. So, for example, we are very sure that arbitrage taxation, that will go away. So
arbitrage taxation will go.
Yes.
Okay.
As in, there's an arbitrage and debt funds.
What do you mean when you say taxation and arbitrage will go away? It's taxed as equity currently.
Correct.
Yeah.
You're saying that that'll be taken off?
Yes.
So that doesn't remain attractive anymore because
Yes.
arbitrage is currently giving you what, 8%?
Yes, and the taxation rate is much lower than debt funds. So what is happening is a lot of money is going from debt funds towards arbitrage funds.
Which makes sense. Liquid short-term debt over arbitrage is an easy trade.
Yes, but that means that bank deposits are suffering.
So there will be a push to shore up bank deposits
exactly.
again.
So bank deposit growth is something which they can't let that number be on the lower side. So what's happening now is the industry has grown from 50,000 crores to 2 lakh crores in the last 1 year. If they don't do anything on the taxation part, my guess is this will grow from 2 lakh crores to 5 lakh crores or 6 lakh crores in the next 1 year. So an incremental 3 lakh crores goes into those funds, which will hurt your bank deposits.
So just if you take a step back a year ago when they changed taxation on debt,
Yes.
that's when arbitrage became,
Yes.
they almost encouraged money coming into arbitrage
Yes.
and equity funds, right? So interesting that they will rationalize it this year.
Yes, because I don't think they would have anticipated that the industry would go from 50,000 crores to 2 lakh crores. And around the same time, even you are hearing stories about bank deposits getting affected.
Yeah.
So
I mean, financial, it's some level of equity euphoria as well. A lot of the fixed income is moving into equities to some extent,
but
right?
If the Prime Minister, the statements which he made, if we have to be a growing economy, only equities can't power you.
Yeah.
Your debt markets, your fundraising has to be equally robust. So they can't let deposits suffer like this. So I think that is the lowest hanging fruit which I can think of. And otherwise, see, they have been very good with the feedback. So even if, let's say, they do something and the feedback is not positive, historically they have gone back and addressed that.
Yeah.
So I don't think the worry of making a mistake will be at the top of the mind. They will do what they think is right, and then based on market feedback, participant feedback, they will course correct.
They're happy to course correct.
Yes, yes.
Now, just the other point, talking about feedback. Now, we'll see what the results are tomorrow as well. But one big theme has been improving employment,
Yes.
rural distress, etc.
Yes.
Fair to assume that those are going to be big themes in the next 5 years, and then some of the sectors, Andrew, that you were also talking about beyond premiumization. If I'm talking about FMCG, consumption, everything that has been lagging also comes back into play?
Does it?
I'm not sure it does. You know, the monsoons hopefully will be in line with what everyone's expecting, so the rural economy, there'll be a push. There might be some land reforms, there might be something towards electricity again, which will, you know, change the kind of landscape there for, you know, making things a lot easier. But these are the big things that you can do. In terms of taxation, you can look at capital gains tax, you can look at many different things. But I think at the end of the day, the market will like only two things. One, the continuity of policy. I mean, there might be some new policies that come through. But that's what the market's after, and you know, we've all kind of forgetting that we get the JP Morgan bond index inclusion this month, which will bring down bond yields. And I keep reiterating banks because, you know, it's the only play in town.
Top three.
The bank Nifty, yeah.
So if India's inclusion in the JP Morgan index happens, we do get upgraded by the S&P in the foreseeable future. Raising debt for India Inc. becomes very attractive, and hence Indian equities also start looking good. But if I compare corporate debt to FDs, how does that look to you? Do you think that is something that may draw attention? Because the regulator has reduced the face value. There is genuinely a push to encourage a little bit of corporate debt amongst retail investors.
Yes. But the normal Indian psyche is, you know, maybe it will take a
bank safer.
Bank safer, yes. So as of now, people are more attuned towards that thought process. But taking a step back to the previous point which you raised, I think there is a misconception that the Prime Minister is more capitalist. I think if you look at his welfare schemes, it has been very pro-poor, very pro-rural. So I think that will be the primary focus going forward.
And rural
as
is
well.
not growing. I mean, look at the GDP reading this time. Rural is still a sour point for the country.
So I think
the K-shaped kind of economy.
It's still, and it still seems like, and you can't have GDP growth without consumption and employment. But you know, you, Andrew, are very excited about the debt markets. We hear all sorts of numbers, 6.5, 6.6, up until March 25. Better than expected GDP reading. You've got the RBI policy meet in a few days, inclusion of Indian JPM, post that you'll of course have the Bloomberg index. And as compared relative to other debt to our global peers, we are far better placed. What do you think the RBI could do on the 7th of June? Will they remain hawkish? Is this even going to be an event or largely a non-event?
It's probably going to be an event which we're going to quickly kind of move on from, because I don't think it's going to reduce interest rates.
They can't, till the Fed does.
Obviously they can't be too negative on the economy because of the figures that are coming through. I think they'll talk about the bond markets, and I think they'll talk about, you know, what they might do with this money coming in. That might be, you know, something which will give us an idea about the rupee going forward. Maybe that's the focus of this policy rather than interest rates. But interestingly, some of the Federal Reserve people have said, you know, if Europe and anywhere else want to go before us in terms of reducing interest rates, they should. So I think India still has that scope to go before the Federal Reserve if they want to.
ECB is going to do that.
But that has never historically happened, Neeraj. It disturbed the rate differential, right? And that's not what you want eventually.
But you're getting flows into your bonds anyway, so that's going to come through. Yeah. So I'm not sure. You've got the leeway.
I think that's when we'll truly create history.
You got the leeway. But you know, you're right. Perhaps you'll just wait for you know.
And the Fed's not moving from the way it looks.
Well, let's wait and watch. I think the second quarter inflation numbers, if they are lower, could actually give an ammo. Because here's the deal, right? I mean, we've had a fiscal glide path laid out for us. If the government is not going to do as much spending, is the push necessary from the monetary side as well? That's the other question that comes into play.
So the only point on which me and Andrew have a difference of opinion is this. I think RBI is very comfortably placed, and they will follow the Fed because they would want that gap to, I think, slightly increase, the interest rate gap to slightly increase. RBI has done a fantastic job, and they can just you know, kind of copy what the Fed does, and then, you know, you don't have to be proactive because they have managed it fairly well till now. The other thing is people are focusing more on Fed. What people haven't factored in is you have US elections in
November.
In November.
So anything post that, yeah.
Yes, and I don't know what happens with this independent thing, but in case Trump is on ballot, then there's a fair degree of confidence that he comes back. If let's say other than the legal assets, and Trump is very vocal about interest rates going down. So in case that happens, at least the U.S. interest rates are coming down for sure.
Okay, so that's on the fixed income side. I just want to lay it down because in case we missed it. So having said all of this, you guys are constructive. You believe there could be short covering, led up move, etc., and stuff like that. Policy push is the favored one. Is banks the biggest play, and what else comes as a added package? Andrew spoke about tourism and capex, etc. But what is top draw? I mean, is capex beneficiary the top draw? Are infrastructure stocks the top draw, or is it something else?
See, I think the government's going to do a push in infrastructure. So it has a multiplier effect across many, many different industries. So you've got to be looking at banks in terms of that scenario, plus capital goods companies. But I'm a little less on the roads and bridges type of construction and more on the kind of smart manufacturing, smart office blocks and so forth. So that's kind of the more Siemens type ABBs of this world. Than the traditional L&Ts and so forth.
Any contra trades? I mean, we've talked about everything that's in the euphoria, but do you think chemicals could be a good space right now? No one's been talking about IT, unfortunately.
Yeah.
It used to be the darling for the last decade or so. Do you feel like these are also some trades and opportunities? Pharma, IT, chemicals?
Well, pharma's had a reasonably good run. I think IT is still your bet on interest rates in the US, right? So. I think they're holding steady because of AI. I think once we pull that trigger in terms of the Fed saying, yes, we're going to reduce interest rates, then that's when I'd be buying IT.
So not yet?
Not yet.
Are you sitting on any cash? Would you sit on any cash if you could at this stage?
A little bit, but not much.
In terms of the next big trigger, and I know we still have June 4th, but you think that budget becomes now very, very key? Yes. Because what we saw in the interim budget was a very conscious decision not to go all out with just a hint of things to come.
Correct.
So in a sense, does that become even a bigger event than June 4th?
No, June 4, of course, is a different issue altogether. Budget would be, of course, much lower in significance, but important nevertheless. Two things would be important. First, what they lay out in budget. Another minor point would be whether the finance minister continues in a role, or we have because ministries will change.
Is that the buzz? Is that the buzz?
No, we haven't heard the buzz. I'm just saying from a normal commonsensical perspective. You have ministries.
No, so then honestly, what the swearing in looks like becomes very, very crucial. One cannot assume that just because you have policy continuity, the same party coming into power, that there will not be any kind of shuffle.
No, I disagree with that. I think everything is controlled by the PMO and the,
No, exactly my point. One can't assume that you'll just have everything going on the same way as in Modi 2.0 in terms of the ministers, in terms of who does what.
So the ministers may change, but the policy continuity will be there. And the ministers could be someone who, if for that particular, let's say, department, that particular set of people might like that adjustment. So broader policy continuity is happening, and budget, I think it will be front-loaded. So whatever reforms they have to do, my view is most of it they will try to plan it in either this budget or the one which were happening in 2025.
Yeah, 2 budgets in a spate of 6 months. I mean, we have 3 budgets in a spate of 12 months. Now that is as exciting.
One every 5-year cycle sees that coming in. So that's always fun.
Yeah, it is always fun. Okay, my final question at least, and Nandik, you reckon from where we are right now, a lot of people have said that in their notes, private notes, that arguably one of the best wealth creation opportunities is up ahead in the next 3.5-4 years. You reckon that is the case?
I think it's more than that. It's a very long-term cycle. 5 years is a long time, but if they are gaining foothold in the east and the south, at this point of time, at least I don't see what changes can happen in the next 5 years as well. So I think it's a much longer story, and it's a good place to be in.
In terms of also, and I just want to take that point forward, in terms of ministries and the actual work they do and the state center sort of synergy, which is, you know, the big sticking point where it comes. Do you see those challenges also going down over the next 5-year cycle? Because then, of course, we'll wait and see what the assembly election cycle shows us.
There are hardly any states in which opposition is in power. You know, after if Himachal also goes, and let's say in the next cycle, you know, Karnataka elections could be tougher. Then, you know,
Maharashtra will have to watch what happens.
Yes, Maharashtra is interesting. Maharashtra will have to watch, but not many states will have a different party in center and a different party in the state. So I don't think that synergy per se is a problem. And there have been chief ministers who have showed willingness to work with the center.
Yeah, no matter what, and GST is a good example of that.
Correct.
GST is a good example of that. More times than not, they have unanimous decisions, and that's a council of finance ministers. What is the list of top 3 reforms that you want to see from a possible 3.0 government, Andrew?
You know, to my mind, there's going to be different reforms. I don't know what's on the government's mind in terms of what big reforms they're thinking. Electricity is probably one area which I think they can still work on. There's a lot of power shortages. I think if you can ease some of that, I think that would be a very, very big, and maybe, you know, some incentives towards, you know, kind of wind power and so forth. So all of these things I think will play out. It might not be a big policy change, but it might be a policy which changes things over time. A lot quicker than we are today. So those are the kind of, so more of the same. I mean, why do I need something which is going to change so quickly for the economy?
I'll tell you one thing that they don't want, and one thing that most people don't want, too much of capital tax tinkering, right? Because if that were to happen, I mean, that's one concern that everybody's laid out, that this rally is great, but what if in the budget there is major capital gains tinkering?
Nandik is still thinking that arbitrage is going to get tinkered with.
Which may not impact any ordinary equity investors.
I think the concern.
No.
I think the
if
concern
your
is
STP money's got to sit somewhere. And I think fixed deposits, I mean, arbitrage is also short-term money.
No, but if
fixed
only that were to happen.
long-dated in nature,
but if
right?
only that were to happen and no other tinkering with capital gains, short-term, then that's not a
maybe
concern.
it'll be a palatable version because look at what the objective seems to be is that too much retail money in options and, you know, the risks thereon, the froth that everyone keeps talking about.
Actually, that's an important point, guys.
Yeah, how do you control that?
Is there a way to have some differential taxation on FNO or derivatives, and does it harm our market's sentiment on that day, if that were to come?
Yeah, because you want to encourage long term.
It's already full tax,
It's
right?
already 39%.
That's what I'm asking. Is there a way to make that even tougher?
You can try and reduce the increased margins, or you can try and do something, but you know, why are you trying to hurt your capital markets in trying to restrict people from investments? And you know, I keep hearing about all these losses. How do we know how much of this is hedging portfolios?
Yeah.
I don't think that detail is there in my mind to take this view that everyone's losing money. I don't think everyone's losing money.
No, you're right. In fact, a lot of people internationally, while we've been ranting about how FIs have been short, and like Andrew mentioned as well, as part of your IPS, you cannot go into any country, big event, unhedged.
Yeah.
So if your option costs are going to be higher, you may even start discouraging that piece of the pie, which I don't know whether is par for the course at this stage.
Yeah. Well,
see, there's no systemic risk as such. There's no systemic risk because everything is taken as margin. And 95% of the volume happens in index derivatives. Hardly 3 or 4%.
And that's Nandik's strength, index derivatives. He gets that piece.
But to finish that point,
Yeah.
so you're saying this is not a big concern for the market?
No. So even if they increase margin, I don't think
it's going to discourage, and you have stocks that are volatile, but the margins are anyways much larger, right? So that it's not one fits all for the market. But very quickly, do you see the markets closing June end higher than it is today?
June end is a long
June
time.
27th.
No, so
Hence, you got to lay the bet.
no, so we are we are focused on the next 36 hours. In the next 36 hours, the way markets are panning out now, I think it will be higher.
Go long on the Nifty.
Yeah.
Well,
right.
Go on.
No, I'm just thanking the gentleman for being here. Thank you so much for being with us today and giving us the thoughts. Really appreciate your time.
Thank you.
And great call, by the way. Pre-election, the gentleman got it right, and hopefully it continues that way.